Good morning and welcome to Sarah's Opening Bell. If you've ever looked at your stock market game portfolio and wondered, hey, I'm trying to sell shares of a stock I know exists, but it's not recognizing the ticker symbol. Or I purchased shares of a stock recently or in the past, but when I checked again, it's now priced dramatically higher or lower per share. Or maybe a company that you're sure was available on the exchanges you can't seem to find anymore. If you've experienced any of these things, you've also likely experienced a corporate action. So let's dive in. Corporate actions are significant events that are initiated by companies that can impact their stock and ultimately affect your investment portfolio. Some examples include stock splits, dividends, or mergers. Now, stock market game investors love a dividend-paying stock. So a dividend is a payment made by a company to its shareholders, usually as a way to share profits. Now, when a company earns money, it may choose to distribute a portion of those earnings to investors in the form of cash or additional shares. Dividends are typically paid on a regular basis, such as quarterly, and can provide a source of income for investors. For example, let's suppose that Company A declares a quarterly dividend of $2 per share to each of its shareholders. This not only rewards current investors, but it can also signal financial health, which may boost their stock price. Now, investors love dividends because it's like receiving a paycheck for owning a piece of the company. So if you own a dividend-paying stock in your stock market game portfolio, you will automatically receive the payment and it'll be added to your portfolio. Our new dynamic research section of the portfolio will showcase whether the stock you're researching is a dividend-paying stock. It'll showcase the amount and past and future payment dates. Now, next up, we have mergers and acquisitions. In a merger, two companies join to form a new entity. While in an acquisition, one company takes over another, even if they continue to operate under its original name. So these events typically happen to increase the market share, increase efficiency, or expand to new markets. So I'll provide a few familiar examples. So what we now know as ExxonMobil, the multinational gas corporation, they were once two distinct companies. They merged in November of 1999 to become what they are today and are listed together as XOM on the New York Stock Exchange. So if you've invested in a company and the ticker symbol is no longer available, check to see if it's undergone a merger or similar corporate action, and you may now have to buy or sell future shares under a new symbol. An example of an acquisition would be Disney's purchase of 21st Century Fox for approximately $71 billion in 2019. This acquisition allowed Disney to expand its portfolio of media assets, including popular franchises and a significant share of the entertainment market. Following the acquisition, 21st Century Fox's assets were integrated into Disney's operations, enhancing Disney's content offerings for its streaming services and other platforms. So if you owned shares of Fox in your stock market game portfolio at the time of the merger, you received shares of Disney for each share of Fox that you held. Retail investors also had the option to receive a cash payment of $38 for each share owned. So if you all of a sudden notice shares in your portfolio of a stock you know you didn't buy, research whether it was recently acquired by another company. And finally, we have stock splits. A stock split is a corporate action where a company divides its existing shares into multiple new shares to increase the number of shares outstanding. For example, let's say Company B, whose shares are trading at $100 each, are looking to make their stock more affordable to investors. They then decide to execute a 2-for-1 stock split. Suddenly, each share is now worth $50. but you now own two shares instead of one. There's been no real change in value, but it can attract more investors. This is a win-win for both the company and the investors. Sony, for example, the entertainment technology and services brand, recently underwent a 5-to-1 stock split that impacted its New York Stock Exchange shares as of October 9th and is now trading at its split adjusted price. So if you own shares of Sony in your stock market game portfolio, you'll automatically receive 4 additional shares of Sony for every share you have, and you will see an adjustment in the stock price. Rest assured that the overall value of your investment remains the same. So, why do these corporate actions happen? Simply put, they allow companies to adapt, grow, and reward their shareholders. They're strategic moves that can help improve liquidity, enhance shareholder value, or position a company for future success. Corporate actions are vital signs in the stock market, reflecting a company's strategy and financial health. As investors, understanding these actions can empower us to make informed decisions. So, next time you hear about a stock split, a dividend announcement, or a merger, remember it's not just business, it's your investment story that's unfolding. So, next time something looks odd in your stock market game portfolio, research whether the company has initiated a corporate action. And there's no better time to begin your research than right now because markets are now open.